The first time in almost a year, the HPI index went up. And a lot of people are shocked. A lot of people are thinking, is this the bottom? Because when we look back over the last 3 years, in all reality, prices have decreased year over year. And so now everybody's wondering, now that we've had this increase, are prices at the bottom? And the reality is you don't know you're at the bottom until prices start going up. And so it's going to be interesting to see how the trends happen here. Where's the market going? Because HPI is just one metric. And a lot of times it isn't the most accurate measurement you should be looking at when it comes to where the market's going. And so that's exactly what we're going to get into here. We're going to be going over all of the information that I have access to. That way you can make your own assumption on what you think the market's going to do. Of course, I'm going to give my own 2 cents, whether you're thinking about buying here in the spring of 2026 or selling here in the spring of 2026, so that use my opinions how you want. And at the very end, I'm going to show you these 2 real estate tools that I think are an absolute game changer when it comes to all things real estate. So stick around to the end for that one. And so here we have it, the home price index, benchmark home price. Last month, it went up for the first time in almost over a year. But it's interesting because it basically did this 2024, 2025, and actually 2023 as well. And then it declined all the rest of the way. And so the question is, are we going to see that slight uptick, which I think is most likely going to happen? And then how much of a decline are we actually going to see here over the remaining of 2026? Hard to know, but just to back up a little bit here, I want to go over the all residential. So it's detached, attached, and condos. And then we're going to get more specifically into the condos, into the townhomes, into the detached. And so if you're looking for that type of information, don't worry, I'm going to go over it. But first, I want to paint the picture of what's happening here currently here in the Fraser Valley. And so that's home prices, but new listings. This is the red line here for 2026. It is following the exact same trend as last year and the year before. There's a lot more new listings, more new sellers coming out to the market. You know, springtime is here and everybody gets excited and wants to put their home on the market. And so there's no question that it's following the exact same thing. And so that's what we can predict going forward, is that we're going to see more new listings hit the market. And then once we hit, you know, the early kind of mid summer, starts to taper off, and then we're going to see that September, you know, increase when everybody's coming back from holidays, everybody's coming back from, you know, their trips, and they want to sell before winter comes. And that's just typically what happens to the new listings. And then moving on to total inventory, it's kind of the same thing, right? We're following the exact same trend here. There's no real surprises when it comes to the activity in the market. More inventory comes in the market, and then as it comes, you know, down into October, November, December, we see less. So there's nothing out of the normal that's happening here. Now, sales, this is always the indicator. Prices and sales, because this is all fine and dandy as far as active listings, but how many are actually selling every single month? And so same thing. There's no surprises happening here. As we can see, the red mark has gone up. There's more sales happening, more activity. Now, the question is, are we going to be on the lower end of sales throughout the year? Again, nobody has a crystal ball. And if they do, they're completely lying to you. That's just the reality of it all. But that's total sales. Now, this is a little graph I wanted to show you here. It's just the sales to actives listings ratio. So according to the Fraser Valley Real Estate Board, the market can either be a buyer's market, a seller's market, or a balanced market. And so right now, we are in a buyer's market. And you've probably heard that term many different places. But as you can see on this graph right here, this blue bar here is balanced market. And then we have buyer's market, which is 12% below. And then 20% or higher is a seller's market. The way I like to explain it is if you had 100 homes on the market, 11 of them sold. Well, that's exactly what happened last month. Only 11% of the homes sold. Now, if you have less of them sell, well, then there's, you know, less people going after said goods, which then in turn brings the prices down, because that's exactly where they have to go. But as more buyers hit into the market, more people are chasing that, you know, that same amount of goods, then essentially it's going to turn more into a seller's market because there's more people chasing those goods and there's only a certain amount of goods. And so that's kind of the explanation that I have when it comes to sales to active listings ratio. Now, this is the second graph I want to show you here. MLS home price index benchmark prices. Red line is detached homes, green line is townhomes and apartments, the purple line. And it's always interesting to see, you know, just how far or where prices used to be, you know, way back in 2005. It's kind of crazy to see. But as you can see here, ever since really 2023, when I was talking about earlier, that prices have been slowly declining since then. And now we've seen it level off a little bit. And it's kind of the same for every single segment. So the question is, what's going to happen next? Nobody knows. We all have our best educated guesses. Now, this is where I wanted to get more granular on what's happening in each segment. The segment being detached houses, townhomes, and condos. And so right now we're talking about the residential attached houses here. And the median home price actually went down 1.4% last month, or month over month anyways. Now, median home price, if you don't know what that means, is basically taking all of the homes that sold, and the one that sold for the price in the middle is what the median home price is. The average basically would be take all of the homes, say there's 100 homes, they sold for X amount of price. You take all those prices, divide it by 100, that brings in the average. So you could really have a property that skews, let's say it sold for 20 million. Well, it would bring the average up quite significantly, where the median home price takes the property that sold for the middle. And so you could have a property that's 20, 30, 100 million, and it wouldn't affect the price, or at least the graph, when it comes to median home price. So I truly think that median home price is the closest that you're going to get when it comes to an accurate home price. My opinion, debate on me that if you will. But basically last month it went down 1.4%. Sales went up, which we've seen that in the other data. Active listings went up. There's more people trying to put their homes on the market. And that resulted into still a buyer's market when it comes to the detached or houses market here. But I want to move on to the residential attached here. We've seen actually a bit of an increase, 2.9% when it comes to the townhomes. And I always think of it like there's more townhomes and even condos. We're going to get into that in a second here, but they're more affordable than the detached market for majority of people. So you may not have quite the decreases as you would, or the volatile market you would as the detached market. But as we can see here, sales are up, active listings are up. It's in a balanced market. Now moving on to the condos and apartments. Here we are. We've seen prices over the last 2 months gone up when it comes to the median home prices. Sales went up, active listings went up, and it's just about into a balanced market. And again, 12 to 20% is a balanced market. But I want to just briefly touch on what's happening, or what the Fraser Valley Real Estate Board was talking about here in their report. And so Fraser Valley home prices level off amidst improving affordability. Surrey, this is just where the head office is. After nearly a year of steady price declines, the Fraser Valley housing market is beginning to show early signs of stabilizing, with the benchmark price ending up month over month for the first time in 11 months. And that's what I was referring to earlier, that it went up 0.3%. And it was mainly, like when you look at the detached market, it went down, but then the attached in the condo market really brought that number to a positive. While March sales activity picked up over the previous month, year-over-year sales throughout the first quarter of 2026 still continue to stumble. It wasn't as much as the previous 2 years, reflecting a market where buyers' caution still lingers. Now, I'm not going to read all of this. I'm just going to jump down to here. We encourage to see early signs of pricing leveling off in the Fraser Valley, said the chair of the Fraser Valley Real Estate Board. While sales remain below last year's levels, this market is presenting a rare window, with greater choice, improved affordability, and meaningful incentives, particularly in the condo segment, for buyers who are ready to make the move with the right professional guidance. Now, again, they're never going to say the market's bad, and I would say the market is improving. I would say it's busier out there. There's more people, reaching out. There's more people, wondering what's happening in the market. Fraser Valley remains in the buyer's market with the overall sales to active listings ratio 11%. We talked about that. Balance being 12 to 20. Yes. Days on market. This is always interesting. Detached home, 39 days. Condo, 43 days. Townhome, 36 days. And so townhomes being the most hottest product right now here. Amid economic uncertainty and rising day-to-day costs, many households are understandably taking a more cautious approach to their finances. That said, the improving housing affordability and potential for upward pressures on rates may make this timely moment for buyers to consider entering the market. Now, that's what the Fraser Valley Real Estate Board has to say. Most of it I would agree with. Obviously, with rates, you just never know what's going to happen here out in the world economics when it comes to rates. Everything's always changing, so keep that in mind. Now, we've gone over a lot of information here, but what does this actually mean for you? right? So if you're buying here in 2026, I want you to pay attention because this section is for you. New listings are starting to hit the market. This is what happens every spring. More new listings hit the market. More sellers are like, you know what, winter's over. It's a great time to sell. I literally have a couple sellers that are in the exact same boat. They're just like, well, summer is here. Let's make a move. And so that's what's going to happen here. So if you're thinking about buying here in the springtime or, in 2026 right now, that's what's going to happen. Increase activity in the coming months as well with more new listings. Sellers aren't the only ones thinking this. There's buyers out there as well thinking, well, you know what? Spring is out here. There's flowers blossoming. There's excitement happening. I'm going to go start looking at homes too. So just keep that in mind. You could potentially have more competition. Prices have flattened out. Though if I had to guess, prices will slightly increase in the spring. We've seen that in the exact same thing over the last 2 years. Prices went up a little bit and then went, right? So when it comes over the next couple months, that's kind of my thoughts when it comes to prices. Now, the last point here is still important to get pre-approved. There's no point going and looking at homes or even starting this process if you haven't gone and ran the numbers. Now, you may not be a numbers person. That's completely fine. But go talk to someone who can help you run your situation, because your situation is different than everyone else's situations. And again, the last thing you want to do is go through all this process and just realize that you can't afford what you want. Or maybe you can afford a little bit more. Who knows, right? It could go either way. So keep that in mind. Now, if you're thinking about selling here in 2026, these are my words of wisdom for you. Price it right from the start. I was literally doing a CMA, comparative market analysis, for a client of mine that we're going to be listing their house. And looking at all the properties around this property, there's so many properties that have sat on the market for a couple months to a year almost. And there's price reduction after price reduction after price reduction after price reduction because they're trying to get top dollar. But really, if they just would have priced it, 50 to 100 grand less than their first price, they probably would have got more money because the market's been slowly declining downwards. Just some food for thought. And so if you're going to price your home, just price it right. You don't need to fire sell the thing, but at least be in a window where you're close to what the market dictates your home is worth. And then you need to make your home stand out, right? There's a lot of inventory on the market. There's a lot. And there's going to be more as we come into the next couple months here. There's going to be more competition. So how are you going to make it stand out? Well, when people walk into your home, is there anything broken? Is there anything, that's wrecked, right? I just think of all these little things. Is your home dirty, right? When we go into homes and people are looking around at the home, how clean is it, right? Because these are all reflections of how you've taken care of your home. And if you haven't taken, or if you may have taken care of your home, but if it doesn't look like you didn't take care of your home, well, that's a problem, right? So go maintain your home basically at its simplest of form. And then be ready for more activity. As I mentioned, there's more buyers coming to the market. There's more sellers coming to the market, but there's also more buyers coming to the market. So take, the activity seriously. More competition ahead. This is all kind of the same thing right here, right? We have more people coming to the market when it comes to buying and when it comes to selling. So there's going to be more competition. Now, this kind of plays well with my last statement here. Stay flexible on terms because we have more activity. We have more competition. We have, more. Well, if you're not willing to be flexible on some of your things, that buyer is just going to go down the street because chances are there's another home there on the market and go try to get that one. And so just some food for thought. Now, before you head out, I quickly want to show you these 2 real estate tools that I think that are an absolute game changer. First one being here is a home evaluation tool. Now, you've probably seen many of these things before. You put your information in, you get a phone call, then you got to talk to somebody. Well, this one here that we have, me and my business partner, zero conversation home evaluation. You scan this QR code, you put your address in, some details, and then it literally spits out a number of what your home is worth. Now, obviously, it's a calculation that's been done. There's a little bit of AI involved, but it literally takes all the actives, all the solds, takes the property information of your property, gives you a number within a matter of seconds. I've tried it many times, and it's actually fairly accurate how well it is. Now, full disclosure, we are going to be reaching out to you because you do have to put your information in, but it's really just to see if you need any help. We're not here trying to convince you to sell or convince you to buy. It's literally, do you need any help? If you don't need any help, we'll go on our way. But if you do need some help based on some of this information we've talked about here today, We're more than happy to give my 2 cents, really, because everybody's situation is so different. So go check out that tool. It's super handy. And the next one here is the Homeowner Advantage. It's an ecosystem that we've created here, really just to give you, the homeowner, an advantage over everyone else, and an advantage just in home maintenance, really. And so what's inside here? We got monthly market updates, videos like this one, so you can stay up to date. Access to my newest videos. So I come out with videos, to help buyers and sellers and just people navigate the real estate market. So a lot of good information there. Annual home review, right? When you think about the reviews that you get done, you get your maintenance done on your car every time. You go to the dentist once a year, doctor once a year, the financial checkup, taxes once a year. Why aren't you getting a review done on your biggest asset, which is your home? And so lots of good information in there. And then a home stewardship program, regardless if you own a home, a townhome, or a condo, you may not know how to maintain it. And so myself and my business partner, we've created this home stewardship program really to give you seasonal advice on what you should be doing with your home. So lots of good information in here. And so if you want that, scan this QR code. You can literally pick what you want, what you don't want, and we'll send it to you. Now, if you are someone who's checking out homes, checking out open houses, seeing what's out there on the market, because you are in the market of purchasing a home, I want you to watch this video right here where I literally go over everything you should be looking at and really how to spot a bad house, because there's a lot of bad houses out there. So go watch that video right there. But that's going to be it for me. So again, thank you for sticking around with me. Thank you for watching. And as always, I'll see you in the next one.